you had a 75% win rate and you lost sometimes. Hey guys, and welcome back to another JSpizzle Crypto YouTube video. In today's video, I'm going to teach you guys how to make between $100 to $1,000 every single day and even be able to scale that up to even more. Stick around to the end of this video because we're going to go over 6 examples of how you do these trades, how to do them properly, how to do maximal risk management. And at the end of the video, I'll tell you if you would have took these last 6 to 8 trades, how much money you would have actually made. Let's get right on into the video. So before we get into our first example, the first thing you guys actually want to do is go over to WEEX.com. You want to use my referral link in the description below to get the max bonuses, benefits, fees off, everything that you can. Currently, I have an $88,000 bonus, so you guys definitely want to take advantage of that. And on WEEX, there is no KYC, so basically that means that you can sign up without showing your government ID or having to prove who you are. You can simply just go on there, deposit money, and make the trades, and government can't track you. So today, our first example is going to be Bitcoin. And we are going to actually go over to indicators right here, okay? And you are going to type in cipher_B. And you'll see right here, Market Cipher B free version with buy from Falcon Coin. You want to make sure that you see Falcon Coin. This guy's a Chad for making that. And you will add that. When you add that, then you will see all these colorful things down here. And you'll be paying very, very close attention to this. Now, these right here where they go under, these are called anchor waves, okay? And these are where we want to trade. An anchor wave is when there's been a really big pullback and crypto is oversold on that time frame. And whenever you see this green dot down here, that means that the market is trying to reverse. Now, it's important to note this is not a buy symbol. This is not a long symbol. This is a trend reversal symbol. So don't go trying to make trades based off of that because that's not what it means and you're just going to lose money. But you can see that like right here, it timed it very well regardless. But on this one, it did not time it well, and we will go over how to avoid trades like that. So the very first one, you're going to want to go over here and get your... And you want to go right in this middle of the green... dot down there and make sure it's right in the middle. Now after that, you're going to want to go over here, and by the way, make sure when you're whenever you first come onto the chart, you're looking at the 4 hourly. You have to do that on the 4 hourly candlesticks. So after you do that, you are going to go over to the 24-minute time frame. If you don't have the 24-minute time frame, you're going to go to add custom interval right there. Go to minutes, 24. Mine's already exists, so I can't add it. You're just going to click add. Then you can come back over here and go down to the 24-minute time frame. And you're going to want to zoom in. So now when you're here, this is where your line was. So we're looking at anything past this, not before it. We're focusing on past it. So what you're going to want to do is you are going to want to go and you are going to want to look for the first anchor wave right here. So that's when it comes below the 0 line right here, below that, and it prints the green reversal symbol. Now, it's important to know that, yes, you have plenty of time to be preparing to watch for this. As you can see, there was around 2 hours between these time periods. Now, I'll let you know right now that when you're watching the chart and you're in real time, you have to let the 24-minute candlestick finish printing because sometimes based off the volume, it will show up, but then it'll disappear and it'll go on it will blink back and forth, flash back and forth. But you want to make sure that the candlestick ends and then you put your trade in right away. So what I'm going to do for the sake of this video is I am going to get my there it is right there, my price range tool. And we'll say that we put in right where the candle bodies meet. So we put our trade in right here. You are going to put in a 1% stop loss on your trades. The trades will be 20x leverage with a 1% stop loss. This is one of the safest types of trades that you guys can make, because if you're investing with, I suggest people to start up with $1,000 and with each trade only invest 10%. So you're only investing $100 out of the 1,000, and then you're only risking 10% of that. So you're literally risking $10 to get started and scale up from there. But either way, you should only use 5 to 10% of your portfolio, no matter how big you get it. Because if you get 2 bad trades in a row, you don't want to wreck your portfolio. So you can see that we never did go below 1% here. We went down to 0.68. So we were good here. We would not have got stopped out. And what we're looking for is we are looking to close our trade at a 2% profit. So basically, if you were to put in $100 right here, okay, on a 20x leverage, you would have made $20 right here. If you would have put in $1,000, if you would have had, so let's say you had $10,000 starting out and you were to put 10% of that, which is $1,000, then here you would have made $200. Congratulations. Now, that is the first example. Each example will be a little bit faster as you guys kind of understand more what we're doing here. Now the second one is right here. Now, I'm going to tell you guys right now that anytime there is a massive liquidation candle that we get every few months, a few times a year, like this one, I'll just be honest, don't even trade for 5 to 7 days, because the market is going to be so volatile that, you know, trends and different things are no longer respected, and things just go up and down so crazy that it's just best to wait for it. And you can see this was actually 6 or 7 days after, or actually from the liquidation, this was a week later. So I would suggest waiting at least 5 days just to let the market cool down some. So with that being said, we're going to go on to the very next one, which would have been back here. Now, just a side note, this does work on other altcoins. We'll go over a few, but the higher market cap, the better. This also works on gold as well, but you don't want to go on like low market cap coins like 100 million or less, because the market's just too volatile that 1% will get you stopped out when, you know, it may not have with Bitcoin or Litecoin or Ethereum, for example. So then we're going to go into the 24-minute time frame. You're going to zoom in so you can see the chart very well. Okay, and you can see right here that we pretty much right away, we set that reverse symbol, green one right here. And so right here is where you would have put your trade in. So we're wanting to make sure that we would not have got stopped out, so we're good. And then I got to go zoom the chart out some. You can see over here we would have been good, and then going up here almost to the top of this candlestick right here, we would have got our take profit taken, and this trade would have been closed. Again, congratulations. So at the end of this video, we'll go through and we'll say like, hey, Grok, if we would have started with you know, $1,000 or $10,000 and we would have done this method, how much would we have ended up with? Because you're also compounding your profits. So like maybe when you started with 1,000, maybe now we have like 1,500, and so, you know, the profits go up from there. I would suggest though, when you get up to like 20, 30,000, start trading with 5% just to be extra safe. So I'm not for sure if I mentioned this or not, but when you're taking these trades and you're looking at the 4-hourly candle, down here you see these numbers ranging from positive to 0 and then down to negative. You want to make sure that these are at least negative 40 before taking these trades. Otherwise, that means that the market may not have pulled back enough. So basically, because what we're trying to do is we're trying to catch the reversal of these. After a big pullback happened, everything's oversold. We're trying to long the market, stabilizing and going back up some. So you want to make sure that it's under negative 40 at least. Okay, so right here we're going to put our thing in right there for Litecoin. We won't do any of these right here just because, again, 5 to 7 day period. And then the next one would have been right here. This one right here, you would not have taken it because it's only around -15. And again, you don't want to long that. One other thing, by the way, that I want to mention, and this is all very, very useful information because this just increases your win rate and your loss rate. But after the 4 hourly, after the reversal symbol has printed and you're looking on the 24 minutes, okay, and you're waiting for the first anchor wave to form, if the chart absolutely skyrockets before that happens, after your vertical line, I would say invalidate that trade because the market is already stabilizing, it's already going back up, and the chances of you have missed it are a lot higher. So just be careful with that. None of these examples that I'm going to go over have that situation, but I've been using this method I made up for 5 years, and I have saw that happen before a few times. And anything that we can do to increase our win rate, it's just a huge plus. Okay, so again, going a little faster now that you guys have the general idea how to do this. We're going to zoom in. Our first anchor wave would have been right here. We don't get stopped out. And then we go up right about here. And congratulations. That's 3 out of 3. Now, this does not have a 100% success rate. If it did, everyone would do it, and everyone would make money, and not everyone can make money. So just FYI. All right, Litecoin right here. Oh, technically, we went right up within like an hour and got our trade. So there is another one. Okay, so let me do just a couple more. We'll do Ethereum and we'll do Solana. By the way, have you noticed what's printing right now on Ethereum? This is a trade setup ready to happen. So if I can get this video out soon enough, which I probably won't because I'm going to be on vacation when you guys see this, but if you can, that will be your long. Now remember, with this one on Ethereum, it's only at around 25. So you can take those trades, but really, again, if you just want to be safe, I would not take that trade. Do -40. And then we're not going to long the liquidation candlestick, which is too risky. All right, so we've got our 2 trade setups. I believe we're 4 for 4 right now. All right, so right here, we have our first anchor wave. And so, again, we don't go down to 1%. We don't go up to 2. Let's see. All right, we would have just barely made that trade because we would have got stopped out on that next candlestick had we not. But we got that one as well. And again, when you win, you're making 20%. When you lose, you're losing 10%. So even if you lost 50% of the time, you would still be making money. So that's just how powerful this tool is, because we want to be safe here. We want to keep good, tight stop losses. Okay, here's the next one for Ethereum. Take our trade right here. We do not get liquidated, or stopped out rather. And then within an hour, we take our trade. By the way, at the time of this video, crypto is just free falling. My golly. Okay, so out of Bitcoin, Litecoin, Ethereum, and Solana, we did the last 2 trades out of all of those. So that was 8 trades, and all of them were winners. Now, that doesn't always happen, okay? But I had Grok do the math and added it all up. Like, let's say we would have compounded our wins and everything. We would have ended up having $1,171 profit if we started with $1,000 and was only risking $10 on every trade. So now let's say that you did this over a course of 90 days, starting with just $1,000. Over a 90-day period, you could turn that into 3,168, and that's if you had a 75% win rate and you lost sometimes. So it's very powerful because you can see over time, if you did this, you could actually turn that 1,000 into tens of thousands. And then you could only start trading with 3 to 5% of your portfolio to be safer, and then build that up over time. And so now, lastly, if you would start off with $10,000 doing this trade over 90 days, only risking $1,000 per trade, you would make $30,765 with so much room for growth and potential. Because if you were to do that again over 90 days, well, then you're looking at around $100,000, and now you're playing with big six-figure money. But that's all I have for today, guys. I made that trade up about 5 years ago whenever I first bought Market Cypher. This is a free one for you guys to use. But let me know what you guys think. The numbers and the charts don't lie, and you can go in and you can actually see it, go look in the history and chart these out for yourself. You can look at other altcoins and try to get a trade a day if you'd like. Again, they work better with the higher market cap ones, just because if it goes down just that 1%, like in a 10-minute or 30-minute candlestick, it will wipe you out. So that's why I like to use the bigger ones. But it also works with gold too, so you can try that as well. But until next time, God bless you guys. Thank you for watching. Bye-bye.